average investor was watching the silver price fluctuate by 50 cents yesterday, the smartest guys in the room just made a move that screams panic buy. Yesterday, December 19th, a massive deal hit the wires that changes everything. Highlander Silver didn't just buy a few ounces of silver, they didn't just buy an ETF. They bought the entire company of Bear Creek Mining for $141 million. Now you might be asking, who cares? Companies merge all the time. But you need to look closer. This isn't just a merger. This is a raid. Backed by the heavyweights of the industry, the Lunden family, the Augusta Group, and Eric Sprott. This deal was a surgical strike to secure one of the largest undeveloped silver deposits on Earth, the Corani project in Peru. Why are billionaires spending $141 million to buy silver in the ground right now? Because they know what I've been telling you for months. The vaults are being drained, the mines are dying, and the only way to get volume in 2026 is to own the dirt. While retail investors are selling, the insiders are buying the whole mine. In this video, I'm going to break down the specific numbers of this deal, show you the crown jewel asset they just captured, and explain why this massive check is the loudest buy signal we have seen in 5 years. Let's look at the evidence. To understand why this deal happened, you have to understand what they actually bought. They didn't buy Bear Creek for its office furniture. They bought it for one thing, the Corani deposit. Corani is a monster. It is one of the largest fully permitted silver deposits in the world. We are talking about 229 million ounces of proven and probable reserves. To put that in perspective, that is enough silver to build 2 billion solar panels. It is enough to supply the entire U.S. industrial demand for 2 years. For years, this project was sitting dormant. It was too big, too expensive to build. The market ignored it. But yesterday, the Augusta Group, led by Richard Wark, a man who has made billions selling mining companies, decided that the waiting game is over. They swooped in. Why now? Because at nearly $70 silver, whether you believe this price level is sustainable or not doesn't matter. What matters is how insiders are behaving at this level. At these prices, Corani isn't just a mine. It's a cash printing press. The feasibility studies were done when silver was $18 and $20. At those prices, the mine was marginal. But at these prices, the net present value of this project goes parabolic. The insiders did the math. They realized that buying this silver in the ground for pennies on the dollar is the trade of the century. They secured 229 million ounces before the rest of the world realized what it was worth. But here is the scary part. It wasn't just greed that drove this deal, it was fear. The insiders know that the junior miner graveyard is growing, and there are almost no good projects left. Let me show you why. We need to talk about the timing. Why December 19th? Why not wait for next year? Because the junior mining sector is in a state of distress. Bear Creek Mining was liquidity strained. They had a massive asset, but no cash to build it. This is the story of the entire sector right now. The insiders, Sprott, Lunden, Warwick, they see blood in the water. They know that small companies are struggling to raise capital because Wall Street hates mining. So, the sharks are eating the small fish. This is called consolidation. And it always happens right before the mania phase. History tells us this. When the big money starts consolidating the sector, it's because they want to control the supply before the price explosion. They don't want to compete with Bear Creek. They want to own Bear Creek. By buying the company now, they remove that supply from the open market. They are effectively taking 229 million ounces off the table and putting it into their own private vault. This confirms that the smart money believes we are entering a period of scarcity. If they thought silver was abundant, they wouldn't be buying mines. They would be selling them. The fact that they are writing massive checks tells you everything you need to know about where they think the price is going. But it's not just about one mine in Peru. This deal is actually a signal for something much bigger involving China and the global supply chain. You need to see the strategic metal connection. There is a quote in the merger press release that most people missed. The CEO of Highlander Silver talked about scaling into the emerging structural bull market. What does that mean? It means they aren't mining for jewelry anymore. They are mining for industry. Silver has officially been designated as a critical mineral by the U.S. Department of Energy. The Corani mine produces lead and zinc alongside the silver. These are the metals needed for the green energy transition. China controls large portions of the global refining and processing chain, and when that flow tightens, Western buyers panic. The Augusta Group knows that in 2026, you won't just be selling silver to banks, you will be selling it to Tesla, to Raytheon, and to Samsung. This merger is a bet on the industrialization of silver. They are positioning themselves to be the go-to supplier for Western tech companies who are terrified of the China export ban we talked about last week. When China turns off the tap, companies will look to Peru and Mexico. And who will be waiting there with 200 million ounces ready to go? Highlander Silver. They are front-running the supply chain collapse. So, the billionaires are buying. The mines are consolidating. What should you be doing? Should you buy the stock or buy the metal? Here is the verdict. Here is the bottom line. We often sit here and guess where the price is going. But today, we don't have to guess. We just have to watch the hands of the giants. Richard Wark, the Lundin family, Eric Sprott. These men have a combined net worth of billions. They have teams of geologists and analysts. And yesterday, they pushed all their chips into the center of the table on silver. They just bought the whole mine. If they are consolidating assets at nearly $70 silver, why would you be selling? This deal is a validation. It proves that the price we see on the screen is cheap relative to the value of the metal in the ground. You don't have $141 million to buy a mining company, neither do I. But you can do what they do on a smaller scale. You can secure your own reserves, whether that is buying physical bars or looking at high-quality mining stocks that might be the next takeover target. This merger is the starting gun for the M&A super cycle. We are going to see more of this in 2026. The big fish are hungry. Don't let them eat your lunch. Take this signal for what it is. The insiders are all in. Are you?